Although this is an incredibly attractive chart, this is not what you need to do to get a futures payout. What's going on, guys? Mr. Zink here. Today's video is going to be all about data. Before we get into the data that I use and have been using to get to my futures payouts, I'm going to annotate this chart real quick just so you can see how simple it is to get to your goals. You're getting in your own way. You have too much on your chart, overcomplicating everything in your head. All you need to do is simplify down to what you know. What I use in the first 3 lines that you see on the chart here is the initial balance breakout. This is the first 60 minutes of market open, and we're going to break that down in the data, showing the high or low as well as the midpoint, always using that 50, of the opening range. Price has a 97% chance of breaking that high or low on any given day. Again, we're going to go and review that data. Along with the initial balance breakout, I use my previous day's 50, which in this case we're annotating Wednesday into Thursday. Wednesday's low from 4 a.m. to Wednesday's high from 7:30 or just about that 8 p.m. close. And then we use our London 50, which is 4 a.m. Any high made in between the time frame of 4 a.m. and whatever the open is, 9:15, 9:30. So our high looks like it was about 7:30 this morning, and then our low should be about 5 a.m., 4:30, 4:45, somewhere in that range. That's our London 50. Going into the data, we're going to cover the initial balance, and this is all brought to you from Edgeful. I'm going to drop the link to them into the description. They do have a 7-day free trial right now. QQQ, and then I go to, and this is what I'm charting on Qs, and then I trade on MNQ on TopStep, Tradeify, whatever Project X platform I'm using at the time. So we go over to Edgeful, we use Qs, we go to all reports, and then we go to the initial balance breakout report. What this is going to give us is the data for any initial balance break over the past 6 months. 93 out of 125 days, you will have a single break, meaning that one of the high or lows will get broken and price will not reverse and go back to that high or low. 24% of the time, you have price break both of those levels. So you'll have the low break for today's example, and then let's say we went all the way back up towards the high. And then 1.6% of the time, or the better way to use this is 98.4% of the time, you're going to have price breakout of either the high or low of that range. Only 1.6 or 2 out of 125 days, price stayed within that range that was established within the first 60 minutes. And you can see how simple this trading strategy is, how simple the model is. You just have to use data. You have to continue to use data that tells you, are you successful? Are you not successful? In what areas are you failing? What areas are you succeeding? You want to pursue those areas that you're succeeding. The London 50 model, we made those adjustments, and I'll drop the link to those adjustments right here. Made adjustments to the London 50. We no longer take it on the opening candle. We no longer use previous day's 50 for bias, and anything after 3 taps on either the London 50 or the previous day's 50, no longer valid. Along with the initial balance range and the data that comes with the initial balance, I also go and use the initial balance rejection, as I just covered. It tells you when either the low or the high of that initial balance is formed. These are the chances that you have to go and break either the high or the low. For today's example, since we formed the high first, the wick high was made pretty much right at open, and then we went and made the low at about 10 o'clock, 10:15. Our chance of breaking the low is 58%. Not ideal. Typically what I like to see are these 92% statistics, but obviously we didn't form the low today first. The initial bounce still worked. It was below 50% of the initial bounce range. I entered about 610, 26 on Qs. It was only a 20-point move to the downside. Pretty choppy today. Along with that initial bounce rejection, I go over to the screener on Edgeful, and I use the opening candle continuation, initial bounce standard, initial bounce rejection, and then the opening range breakout. In these 4 combinations, it shows you Apple, Amazon, Microsoft, Meta, Nvidia, Tesla, SPY, Qs. Are they bearish? Are they bullish? Why? And then it gives you an overall bias for the day. I briefly look at this around 10:15, and this guides me towards just adding confluence if I want to take longs or if I want to take shorts. For MNQ, I chart Qs and then I go and trade on MNQ. Typically do 5 lots of MNQ. As you can see right here, I'm already locked out for the day because it was, again, pretty choppy. Didn't want to risk anything. Glad I did. We had the initial balance break. We have done absolutely nothing since. The next thing that I want to add on the initial balance, I'll go back to Qs, go to initial balance report, and we're going to go down to the buy levels. And what this tells us is what are the chances that we go and proceed to these standard deviations. Standard deviations are just the size of the initial balance. Half a standard deviation is half the initial balance, also 50%. One standard deviation, one initial balance, so on and so forth. Our percent chances of proceeding further past the initial balance, pretty low, 50, 50, 50, and then 33.3%. That's us going to half a standard deviation, one standard deviation, 1.5, 2. This is also just for Thursday. We've only had 6 total breaks on Thursday. 3 out of 6 of those have happened to hit 1.5, 1, and 0.5. What I like to use is I just like to use all days, and then I go down and I'll also tag all of these days, Monday, Tuesday, Wednesday, Thursday, Friday. Save that, and this gives you a better read. These are the more accurate levels that I have seen. I've seen personally, not data that I've kind of collected day to day. We only have a 1 in 3 chance of going to half a standard deviation up or down. We have a 1 in 5 chance of going to 1. We have a 1 in about 20 chance of going to 1.5 on either side. What that tells me is that once the initial balance is broken, and this is also why I've been getting most of my trading done prior to 10:30, once the initial balance is broken, you have a very slim chance of going to 0.5 or even 1 standard deviation. So why would I want to trade the chop that's between the bottom of that standard deviation and 0.5 or 1? It's not really much of a reason. Now, obviously, there's news that's going to come out sometimes. We have FOMC at 2. Sometimes it's going to spike down to 1, 1.5, but it's a pretty low percent chance. Another reason that I'm locked out today is because we have 1 in 3 chance of going down to 0.5. We happen to hit 1.5. We also, if we just go to the QQQ initial balance report itself, the percent chance of us reversing and going back up is only 24%. Doesn't really make much sense if we're pursuing a 24% statistic to the upside or if we're pursuing a 30% chance to the downside. Doesn't add up. There's no reason for us to take a valid entry on that because they're pretty poor data points, to be honest. So I'm happy with my trade at 10:30. Yes, I only made $79 today. I did just take that max payout yesterday. There's no reason for me to pursue the rest of the day. I'll go out, make a YouTube video, play some video games, work a little bit on the side, whatever I want to do for the day, I'll go and do that. There's no reason in me staring at the charts, knowing that data is telling us we don't really have that significant of a chance of going down or up. We're just going to chop for the rest of the day, which is exactly what we're doing right now. We're pretty much just making engulfing candles, pivoting after a move to the upside or downside. Not much of a reason to pursue the rest of the trading day. And this is back tested not by myself, but by Edgeful. And you can go to 6 months or you can go to 5 years. If I go to 5 years, it's going to take a minute to load here. It should be about the same statistic. And just looking on Qs for the initial balance report, and this is going to go all the way back to 2020. Once it loads, this is going to be maybe a couple more seconds here. But I do this every single day at open, as you can see. Yesterday we had the initial bounce high break. Previous day we had the initial bounce low. We had the initial bounce low break. This one happened to be a double break. But after we took the low at 10:30 on Monday, that was all done. There's no reason for me to chase a 24% statistic to going to the upside, have a double break. I just tip my hat to it, move on to the following trading day. This is back tested for 5 years now. 953 out of the past 1,254 days. 76% of the time we've had a single break, 21% of the time a double break, and only 2.6% of the time, 33 out of the past 1,200 days, price stayed within that initial balance. And this is data back trading. There's no emotions associated with it. There's no reason for me to over leverage into positions. I take the same trade every single day. We have a reaction at London 50, great. We have a reaction at previous day's 50, even better. If not, I wait for the initial balance. Okay, we're trading towards the downside of that initial balance. I'm going to take 5 M&Q. I'll have $200 profit, or I'll have a $200 loss, and I'll move on to the next trading day. London 50 adds confluence to those levels, as well as adding size. So if we have the initial balance report, and this is just a hypothetical for today, let's say we were trading towards the high of that initial balance, price came down, retested London 50. Okay, I'm going to enter 5 M&Q at London 50. We are also targeting the initial balance high along with London high, so I'm going to add another 5 M&Q. Now I'm in for 10. Okay, let's say that we also had an opening candle continuation showing that we have a 78% chance of closing green on the day. I'm going to add another 5 M&Q to that. So that one trade with extra added confluence to it, I'm now in for 15 M&Q. That's where those big profit days come from. Other than that, it's really just 5 M&Q, $200, $300 profit days. Those stack up a lot faster than you think. Make sure that you're using some kind of data or backtesting your own strategy. In this case, I love using Edgeful. Again, I'm going to drop the link to them in the description of this video. That's just a quick review of how I've been trading, how I just took a max payout from TopStep yesterday. Should hopefully be in the bank sometime today. Also just took a $7,500 payout from Tradeify, all from hitting $200 to $500 days. Yesterday, I went a little heavy, got $1,500 on the initial balance. Steady gains, no emotions associated with it, just playing the data. Again, check the link in the description. They have a 7-day free trial going on right now. Hope you guys enjoyed this quick little video. Peace out.